Welcome to the WealthAbility Show, where we're always discovering how to make way more money and pay way less taxes. Hi, this is Tom Wheelwright, your host, founder, and CEO of WealthAbility. So what if the IRS could make you prove that every dollar that went into your bank account wasn't taxable? In other words, what if the banks actually had to report as if every dollar that comes into your bank account is income, whether it's from a home refinancing, whether it's from a loan, whether it's from a transfer from another bank account? What if that were to happen? Well, that's actually in discussion right now at the U.S. Congress. We are very privileged to have two very important guests, Jim Amundson, head of the Community Bank Association of Minnesota, and Patrick Hedger, who's Vice President of the Taxpayer Protection Alliance.
As you said, I'm Jim Amundson, and I lead the Independent Community Bankers of Minnesota. We're a trade association that represents community banks in our state, and we're very actively working this issue.
Hi, Patrick Hedger, Vice President of Policy at the Taxpayers Protection Alliance. We're a nonpartisan, nonprofit taxpayer and consumer watchdog based in Washington, D.C. And this stuff is right in our wheelhouse. I mean, talk about a taxpayer issue, talk about government accountability, the idea of the IRS snooping on payments and account transactions as low as $600 is what this proposal is just egregious, and happy to be here to be able to talk about it.
Patrick, if you could just kind of walk through what you see that this proposal really is supposed to do.
Yeah, so there's a lot of talk in Washington about the so-called tax gap, right? That there's a lot of, we have what the CBO projects tax rate should be able to bring in, and then there's what actually comes in the door, and then the difference is the tax gap, which assumes that there's a certain amount of tax avoidance out there, and obviously that's the case, right? Obviously not every taxable dollar out there is taxed, but a lot of that is for completely benign reasons, and a lot of that is just because folks aren't aware of it. I mean, it's the average Joe and Jane out there that doesn't realize that income or that transaction is taxable. And usually we look the other way because talk about a drop in the bucket. I mean, the average person not paying tax on a couple $100 on a certain transaction that may be taxable is really not going to cover any sort of, certainly not going to cover the deficits we're running right now, which are measured in the trillions of dollars. Last year, we had 60% of Americans almost paid no income tax or owed no income tax. So this is just really grasping at straws, and it's Democrats looking for any way to justify a spending blowout.
Banks would have to report all of the deposits coming into every bank account. Any bank account that's over $600 gets over $600 of deposits. Have I got that right, basically, Jim?
Yes, all the inflows and outflows. So it's a full accounting of on any account in excess of $600. I mean, there's what's the methodology behind the $600? As Patrick was saying, it's a drop in the bucket, and there's really been no cost benefit analysis done on what it's going to take to make this happen. And the estimates of, $500 billion of additional tax revenue over 10 years is, I think, a reach. And nobody's been able to produce, how that was calculated.
And there's also been a talk about automatic withholding on all transactions that are $600 or above. And it's not just bank transactions as well. We're talking about financial service apps like Venmo, PayPal. So if get a group of friends and you cover the cost for a cabin weekend on Airbnb and they all pay you back, those transactions could be subject to withholding until you prove that that's not income. What this is really designed to do is give the IRS an excuse to audit as many people as possible. And you're not going to bring money in the door from the transactions themselves, the taxes on the transactions, but you're going to bring in the money through fining people after they've gone through audits and they've put their hands up to say, I don't have the CPAs or the lawyers to be able to deal with this.
What's the bank's take on this? What's there? You mentioned before we got started that every one of your members is concerned about this. Why? I mean, it seems to me simple reporting.
People might think that, but it's far from simple, and it's really, to get it in the format that the IRS or Treasury or whoever would collect it would require. Every one of these banks has a core operating system, and this would be an additional requirement that they would have to pay their core operating system or their core provider. Those companies don't do anything out of the goodness of their heart. And so to be able to get this information put together. It becomes a reporting burden, at a time when, community banks especially did about 65% of the Paycheck Protection Program loans over the last 18 months, and, served as a real backbone of that program. And, to have them start throwing on additional reporting and compliance requirements right now, to me, is it's one of the main issues we have with it, is the burden it would create and the costs that it would create for these small banks that are already overburdened by Dodd-Frank and other heavy bank regulations.
And to a point that was made earlier about privacy, the IRS just recently leaked a bunch of information about the wealthiest individuals in this country to ProPublica. And no wrongdoing was found in that. All it was found is that, wow, it turns out the wealthiest people in this country have really good accountants. and that was the big scoop. And so how can we trust the IRS here with information, again, as granular as a $600 transaction? You could be tracking people's airline tickets at a price like that. It's a massive invasion of privacy.
Why is this happening? In other words, is it just a way to justify more funds to the IRS? Is it a way to justify the $600 billion spend that's going to come out of this? What is behind this? Because it can't possibly be that the IRS doesn't have enough to do.
I think it's probably more of a national security surveillance push, being under the guise of trying to generate revenue and trying to close the tax gap. But because otherwise it doesn't make sense, because again, this is really low, and it's not even low hanging fruit. This is not the core of the problem. This is not the core of the federal government's budget problem. And as you said, like there's plenty that the IRS could already be going after without changes to tax law like this. So I really think it's some sort of national security excuse. They're looking for drug or crime excuse. They're looking for drug transactions, things like that.
Do you think they might use this just for data and then pull people for audit, or do you think they will make it an automatic audit?
I think it'll be. I don't think the IRS has the resources to do the automatic auditing, but I think they're going to paint pictures of where they're seeing, probably on a geographic basis and also an industry basis, of where they're seeing people skirting the rules, or whether they know it or not. Because we kind of already see this in IRS audit enforcement, right? They disproportionately target indigent communities. The Mississippi River Delta has something like a 40% higher audit rate than the rest of the country. Out of 1,000 tax returns, about 8 are audited nationwide, and the Mississippi River Delta, it's something like 11 to 12, somewhere in there. So, that's significantly higher. And I think that's just because the IRS knows that these are folks that don't have the hope of hiring a high-powered CPA or attorney to go to bat for them. Why would you go after the Jeff Bezoses of the world when you can nickel and dime folks in the South and up your statistics in terms of tax enforcement and get those settlements? It's just the perverse incentives of government enforcement there that are driving things like this, and I think that's what is really at the core here as well.
We already have audits where they will come in and they will make you justify all of your, they'll look at your bank account and we have to justify. I've been through those audits with clients before, and they'll pull every single bank account for 12 months. And they'll say, okay, what's this? What's this? What's this? Actually had an IRS auditor say, well, and we said, well, this is a loan. Came in, here's the loan document. Said, well, loans are taxable. Well, so under what theory are loans taxable? We all, the three of us know they're not. Okay. But this IRS auditor didn't know that, which is a little scary in and of itself. Go back to national security. You think that this is a national security thing? You think this is so that they can just look into, will they be able to look into the details of the bank account, or will they just get this gross reporting?
So national security is certainly one aspect or justification that they're going to use, but it's with more information that they have, the more things that they can enforce. Whether it is hitting their audit numbers or hitting their having that national security access. It's sort of an all the above thing, and they're trying to get as much granular detail as possible, and then go from there and decide what they're going to do with it.
What can the government see now? Because under Obamacare, we had, they got some access to make accounts. What is it that the government has access to already?
Well, they don't have any direct access to accounts or account information. You certainly, there's if you're referring to health savings accounts, for example, that information is reported on, the money that has gone into the health savings account, the money that has gone out. And, if you're not using it on eligible medical expenses, then there's a tax implication there. The 1099s on accounts that have earned interest or made income, those go out. And then, of course, as you said, if they suspect wrongdoing, they have the authority to audit today. That why not? Why do you have to expand that power to this level? We don't understand that. If we see them coming in and they're doing $3,000 one day, and then maybe go to another branch and do $3,000, and then do $4,000 the next day, we either have to report that as suspicious, or consolidate it and complete a currency transaction report. And so they're getting that information. And this overreach, it would be so much information. I can't possibly believe that they'd be able to process it and do anything valuable with it.
Thank you both. Thank you everybody for listening and participating in this, because this is an education issue. And the more we get educated, at least we have a choice. The challenge right now is that a lot of people don't know about this and they can't make a choice. And education is all about giving people the freedom to choose. And the more education they get, the more freedom they have. And not only that, but the more education, especially the more financial education they get, the more money they make and the less taxes they pay. Thanks, everybody. We'll see everyone next time.
You've been listening to the WealthAbility Show with Tom Wheelwright. Way more money, way less taxes. To learn more, go to WealthAbility.com.